Ever pondered why some investors choose high-risk investments despite the danger of losing it all? Well, it's quite similar to the thrill of mountain climbing. The higher the peak you aim for, the greater the risk. But with that risk comes an unparalleled view that makes the journey worth the peril. High-risk investments are those that have the potential for great reward, but also a significant chance of loss. They're the Mount Everests of the financial world, offering breathtaking returns at the cost of considerable risk. On the other hand, low-risk investments are more like gentle hill walks. They offer stability and security, but the views, or in this case returns, are relatively modest. So why do some investors strap on their financial climbing gear and aim for the highest peaks? The answer is simple: the lure of the view from the top. The potential for high returns can be incredibly enticing, even with the inherent risks. Just as mountain climbers prepare extensively for their journey, so do investors who dive into high-risk investments. Remember when Amazon was just a fledgling online bookstore? It's hard to imagine now, given Amazon's status as one of the most valuable companies in the world. But there was a time when it was just a small startup, operating out of Jeff Bezos's garage in Seattle. In the mid-90s, Amazon was a high-risk investment. The internet was still in its infancy, and many were skeptical about the idea of buying books online. Traditional brick-and-mortar bookstores were dominant, and the concept of a virtual bookstore seemed to many like a long shot. Even as Amazon went public in 1997, there were doubts. The company wasn't profitable, and it was spending heavily on expansion. But despite these challenges, Amazon had something that caught the eye of some investors: potential. Bezos had a vision of Amazon becoming not just an online bookstore, but the world's largest retailer. He believed that the internet would revolutionize the way people shop, and he was determined to position Amazon at the forefront of this shift. For those investors who saw what Bezos saw, the potential rewards outweighed the risks. They recognized that Amazon was at the vanguard of a new era in retail, and they were willing to bet on its success. It wasn't a safe bet by any means. At times, it must have seemed like a gamble. But as we all know now, it was a gamble that paid off. Today, Amazon is a global powerhouse, a titan of e-commerce, cloud computing, digital streaming, and artificial intelligence. It has transformed the retail landscape and changed the way we shop, consume media, and interact with technology. And those early investors, they've seen their stakes increase exponentially, turning what was once a high-risk investment into a windfall. So next time you consider a risky investment, remember Amazon's early days. Remember the skepticism, the uncertainty, and the potential. And remember that sometimes taking a risk can lead to extraordinary rewards. As they say, fortune favors the bold. Those who took the risk and invested in Amazon in its infancy are now reaping enormous rewards. Imagine mining a digital currency in 2009 that would be worth thousands per unit a decade later. Casting our minds back to the early days of Bitcoin, it was a concept so novel, so foreign, that it was largely brushed off as an internet fad. It was a time when the term cryptocurrency was not part of the common vernacular, and the idea of a decentralized digital currency was as alien as it was fascinating. Investing in Bitcoin during this period was considered extremely risky, even foolish. Traditional financial institutions scoffed at the idea, while most people simply didn't understand it. But a select few saw potential in this new form of currency and took the leap of faith. The early adopters of Bitcoin were often tech enthusiasts who were drawn to the innovative and disruptive potential of the technology. They mined and purchased Bitcoins for mere pennies. For them, it was more about supporting a revolutionary idea than profiting from it. Little did they know, they were laying the groundwork for a financial revolution. As the years passed, Bitcoin's value fluctuated, but a general upward trend was undeniable. From being worth less than a cent in 2009, it skyrocketed to a peak of nearly $20,000 per unit in late 2017. The world watched in awe as Bitcoin made headlines and millionaires alike. Those who held on to their Bitcoin through the ups and downs, the booms and busts, are now part of an exclusive club. They are the Bitcoin millionaires, individuals whose foresight and appetite for risk have paid off in a way few could have predicted. The Bitcoin narrative is a testament to the power of innovation and the potential of high-risk investments. It's a story of how a misunderstood and underestimated digital asset could become one of the most lucrative investments of the 21st century. It's a tale of visionaries who dared to believe in a new world order and who are now reaping the rewards of their conviction. The Bitcoin story is a classic example of high risk, high reward. So, what makes an investment high risk and potentially high reward? Well, there's no magic formula, but there are certain key elements that characterize these kinds of investments. First off, we have volatility. This refers to the rate at which the price of an investment increases or decreases for a set of returns. High-risk investments are often associated with high volatility. Think of it like a roller coaster ride. The steeper the peaks and valleys, the more stomach-churning the experience. Then there's market uncertainty. This is a fancy way of saying that the future of these investments is unknown. The sectors they're in could be new and untested, like cryptocurrency a few years back, or they could be subject to sudden shifts due to technological changes or geopolitical events, and of course, the potential for high returns. This is the gold at the end of the rainbow, the reason why investors are drawn to high-risk investments in the first place. The hope is that despite the volatility and uncertainty, the investment will eventually pay off in a big way. But here's the thing, these elements should not be approached lightly. They necessitate a high level of research and due diligence. This means digging into the details of the investment, understanding the market it's in, and being aware of the factors that could affect its performance. It's about having a clear-eyed view of the risks involved, and not being swayed by promises of quick riches. It's also about knowing yourself as an investor. Are you comfortable with the idea of potentially losing your investment? Do you have the patience to wait out the ups and downs? These are crucial questions to ask before diving into high-risk investments. In the end, the lure of high-risk investments is undeniable. They offer the possibility of outsized returns and the thrill of venturing into uncharted territory. But they're not for everyone. They require a strong stomach, a discerning eye, and a willingness to take calculated risks. Understanding these elements can help investors make informed decisions about high-risk investments. Is there a secret formula to balancing risk and reward? A question on the minds of many, and rightly so. The world of investments is a roller coaster ride where the highs are thrilling and the lows downright terrifying. So, how do we make sense of this ride? Let's start with the basics. Balancing risk and reward is a fundamental aspect of investing. It's about understanding that the higher the potential return, the greater the risk. But it's also about recognizing that not all risks are worth taking. Making investments that have the potential for high returns is exciting, sure. But it's also important to ensure that these investments don't have the power to wipe out your entire portfolio. That's where diversification comes in. The idea is simple. Don't put all your eggs in one basket. Instead, spread your investments across a range of different assets, sectors, and geographies. This way, if one investment doesn't pan out, your entire portfolio isn't at risk. In other words, diversification is your safety net, protecting you from the unpredictable swings of the market. Yet diversification alone isn't enough. You also need to understand your own risk tolerance. This is a personal measure of how much risk you're willing to take on in pursuit of potential returns. It's about knowing your own comfort level and making sure that your investments align with that. Are you a thrill seeker, ready to ride the highs and lows? Or are you more of a cautious investor, preferring steady growth over potential windfalls? Remember, high-risk investments can provide significant returns, but they can also lead to significant losses. It's a dance, a delicate balancing act. You need to be prepared to take some risks, but also smart enough to know when to step back. While there's no magic formula, understanding your own risk tolerance and diversifying your portfolio can help balance the scales. So go ahead, take the plunge. But remember to always keep your life vest on, because in the world of investments, it's not just about reaching for the stars. It's also about keeping your feet firmly on the ground. Investing is not a game of chance, but a strategic play. Let's take a moment to revisit what we've uncovered today. Remember the early days of Amazon? The company faced immense hurdles and skepticism, Yet those who dared to invest in its potential are now reaping the rewards. Similarly, Bitcoin's meteoric rise was unpredictable, but it has proven to be a game changer for many investors. High-risk investments like these are not for the faint of heart, but they do offer the potential for substantial returns. The key lies in your ability to conduct thorough research, understand the inherent risks, and make strategic decisions. It's about balancing the scales of risk and reward, about knowing when to take the leap and when to hold back. With the right approach, high-risk investments can turn into high rewards. But remember, the higher the risk, the greater the potential for loss. It's a thrilling venture, but one that demands your utmost diligence and strategic foresight.